Webull stock closed Friday's reduced hour session at $9.33, up 0.07, or roughly 0.76% for the day. It may look like a small gain on the surface, but the context behind the move is what matters most. This is the second week in a row where Webull has shown stability above the $9 mark after previously finding its footing around $8. That tells us the market is beginning to define a new short-term range. It also suggests that investor sentiment, while still cautious, has improved compared to the recent period when the stock was drifting near its lows. What makes Friday's close especially interesting is the behavior during the session. Despite the market operating on reduced hours, Webull held comfortably above $9 for most of the day and even touched intraday highs close to $9.50. That demonstrates two things. First, there is buying interest at these levels. And second, the sentiment around the company appears to be slowly shifting from uncertainty to cautious optimism. When a stock climbs back above a psychological threshold and stays there, even during low-volume sessions, it usually indicates underlying demand. To understand why the stock is behaving this way, we need to revisit the bigger picture. Webull is coming off one of its strongest quarters in recent memory. Revenue grew more than 55% year-over-year. Customer assets rose. Trading-related revenue surged. And importantly, the company turned a profit. That shift from losses to profitability is essential for a high-growth fintech company trying to reposition itself in a competitive market. The earnings beat was not a minor one. It surpassed expectations and sent a clear message that Webull is not stagnating. Instead, the company is quietly stabilizing its business and building capacity for the next phase of growth. In addition to the strong earnings, Webull also unveiled its new artificial intelligence-powered tool called Vega. Vega is designed to help users make more informed investment decisions by integrating data, insights, and alerts into a unified experience. For a platform competing with established brokers, this kind of innovation is important. It shows that Webull understands the need to differentiate itself not only through cost, but through user experience. While we will have to wait to see how widely Vega is adopted, it represents a clear step toward what could be described as Webull's third phase as a company. A shift from simple brokerage to a full-featured financial technology platform. This combination of improved financial performance and product evolution is one of the key reasons sentiment has begun to stabilize. Investors are paying attention. The company's fundamentals are improving, and the tools it is rolling out are more advanced than what many competitors offer at the same scale. Yet despite all this, the stock price remains well below its previous highs. That disconnect between performance and valuation creates opportunity. It does not guarantee anything, but it creates a situation where improved results can lead to outsized reactions from the market, especially if sentiment turns more positive. There is also the technical side of the story. The stock previously tested the $8 level multiple times and bounced decisively. When a stock finds a floor, holds it, and begins forming higher lows, traders interpret that as the early stages of a base. And bases often lead to recoveries, especially for companies with strong recent earnings. Over the past few sessions, Webull has continued forming these higher lows. Each time the stock dips during the day, buyers step in sooner. The range tightens. That's often the kind of structure that precedes a more convincing move. Of course, the story is not without risk. The broader fintech sector remains sensitive to market sentiment, trading activity, and macroeconomic conditions. Webull's performance is still tied to retail investor engagement. If retail participation slows, or if trading volume declines, earnings can feel that pressure quickly. Analysts who follow the company have reduced their price targets in recent months, even while acknowledging that the long-term potential remains intact. This shows that the market is not prepared to be exuberant yet. Instead, it wants to see consistent growth before rewarding the stock with a higher valuation. But there is also a counterpoint. Because expectations are low, Webull does not need to deliver spectacular numbers to impress. It simply needs stability, moderate growth, and continued product rollout. That sets a lower bar for upside. And in many cases, stocks recover most sharply when expectations are depressed but fundamentals begin showing signs of improvement. Webull appears to be moving into that territory now. Not in a hype-driven way, but in a slow, steady, foundational way. So the real question heading into the weekend is this: what does Webull's latest price action tell us, and how should we interpret the broader direction of the company? Given the financial recovery, the new AI features, and the technical support forming around $9, it's reasonable to take a cautiously optimistic view. Not the kind of optimism that assumes instant rallies or explosive rebounds, but the kind grounded in sustained improvement. Investors tend to reward companies that demonstrate clear progress, even if that progress is gradual. This is why the idea of Webull entering its version 3.0 phase is compelling. The company's first phase was the high-growth, retail trading boom of the past few years, driven by zero-commission trading and a wave of new investors. Its second phase involved volatility, market pullbacks, and a recalibration of user activity. And now, its third phase seems to be emerging. A phase built on improved earnings, technology upgrades, deeper user engagement, and a renewed push to differentiate itself in a crowded space. Companies often reinvent themselves in cycles, and Webull appears to be doing exactly that. For investors watching from the outside, the next few months will be important. The key things to monitor are trading volume trends on the platform, adoption of the Vega AI tool, and market conditions more broadly. If volatility increases, retail activity usually follows. For a platform like Webull, that can be a tailwind. If macro stability continues, that may also encourage new account funding and asset growth. Both scenarios carry different benefits. Another element worth watching is how Webull positions itself against competitors. The broader trend in Fintech is moving toward integrated platforms. Investors want tools, analytics, education, and data, not just order execution. The brokerages that adapt to that reality stand to gain a structural advantage. Webull seems aware of this shift. The Vega tool, the diversified product lineup, and the steady earnings improvement all suggest that the company is positioning itself for a more mature phase of growth. So as we head into the weekend, the most intriguing angle is not simply that the stock closed at $9.33. The deeper story is that Webull is showing signs of stabilization at the same time that its product offerings and financials are improving. That combination does not guarantee a rally, but it creates the possibility for one. And that alone is enough to make the stock worth watching more closely. Investors are drawn to stories of reinvention, especially when the reinvention is backed by real numbers. That's what makes the current situation unique. Webull has quietly put together one of its strongest quarters while rolling out new features that could reshape how users engage with its platform. The stock may still be near its lower range for the year, but the company behind the stock is evolving in ways that could eventually shift market perception. In closing, Webull's Friday performance highlights a company that is no longer drifting downward. Instead, it appears to be forming a base, stabilizing its financials, and preparing for the next phase of growth. The optimism here does not come from hype or speculation. It comes from evidence. A stronger quarter, a new AI tool, a healthier balance sheet, and a stock that has found its footing and is beginning to establish upward structure. As long as the company continues delivering steady progress, the market will eventually take notice. Whether that moment arrives soon or takes time, the signs of improvement are already visible.